So today is the day we have the elections happening within the US. It's the day we've all been waiting for, and we should get some more clarity on market direction in the next couple of days. So in today's show, we're going to discuss what the potential playbook could be for crypto, how you can trade this move, and what you should be looking for if either of the parties win. Currently, at least, according to Polymarkets, which is not entirely accurate, but people are putting their money where their mouth is. You have 58.3% probability that Trump, or at least they're voting in favor of Trump, and 41.8% in favor of Kamala. If ever you were looking for a dip buying opportunity, well, now is probably that opportunity while the rest of the market moves into a risk-off environment. So smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. I'm going to go through as much content as possible, as quick as possible. We're going to have a look at the stock market specifically, since that's going to be a predominant driver for what you can expect for crypto. And I actually have a couple of trades that are lined up specifically for the stock market. So stay tuned until the very, very end of the show, and let's get into it. One thing I'm looking at over here is the VIX, right? If you look at the S&P 500 overlaid with the VIX put to call ratio underneath up here, we can see some valuable information, which if you look at Jason, he says the volume in VIX puts was more than 2 times that of calls on Friday. That's one of the highest turnovers in 15 years. And it has typically spiked at the times that we have really extreme anxiety, because this is probably one of the most important elections for the US, at least maybe with even possibly within our entire lifetimes, right? So you can see over here, the prior times that you have that VIX put call ratio spiking to these levels has actually marked major bottoms within the market. This was your coronavirus. This was just after that, where they started to go into extreme money printing. And then, of course, we have this period right over here. Now, if we look at the VIX in terms of the actual chart over here, not the ratio between the calls and the puts, but if we actually just look at the VIX, you can see it's pushing up into a key zone around this 23.25% level, which we previously saw, right? The last times that we saw this, the breakdown of the VIX, or the rejection from this level over here, has caused a major low within the stock market, and then you start to see a bounce out of that area. So I expect volatility is going to increase, right? Hence the put to call ratio is so high at the moment, and you can expect that volatility within crypto should also have big spikes both up and down. If you look at the 24-hour long to short ratio, you're sitting at about 51% still on the short side. Shorts have been dominating the market for about 7-8 days in a row, 49% on the long side over here, and it's longs that continue to get the majority of the liquidations at 152 million out of the 209 million for the last 24 hours, right? So we'll continue to monitor this, focus on this chart over here, leading into the elections and as the results come out. Now, one thing that will create extreme spikes is, of course, if the election is contested, right? That's going to be the major telltale sign that you're looking for extreme volatility, and then you can try and position yourself thereafter once the market decides what the right move is. So as we're watching the VIX over here, we're also looking at the DXY, still anticipating the possibility for breakdown. We're only going to get the real decision of this move, whether it's continuation up or actual proper pullback based on this election phase. And you can see also the big important dates, I think almost for at least markets, maybe more important than the elections right now, is going to be this FOMC statement and press conference, as well as the update on the US federal funds rate. And the reason for that being is because we're looking for signs and symptoms that the Fed may actually start to buy back assets. And we can look at the Fed's total assets. What you can see over here is that in periods where the Fed start to aggressively buy back assets, as marked in the red over here, you can see that shift in momentum. They started to buy back assets pretty aggressively, adding to their balance sheet. Then you tend to see the stock market rally really aggressively. And as it currently stands, well, right now, they still haven't added anything to their assets. They've mostly been selling off. And this is that pivot or switch from quantitative tightening into quantitative easing. You should simultaneously see that occur with the cut of the interest rates and the announcement at that press conference. Now, if it doesn't happen at this press conference, we're going to have to look to the next one. If it's not at the next one, then possibly the following one. But at least a rational person and economist would believe that it can't really go on much longer, right? It's anywhere between now and the next 3 or 4 conferences, we should see a major shift over here in the Federal Reserve's assets, where they start buying back assets, and that helps you want to trade in alignment with the Fed, right? When they're selling, typically you remain on your hands. That's the best playbook. And when they're buying, then you want to be buying with them aggressively, and you can monitor that to a T. So also, if we look at one of the top fund managers, Fund Strats, Tom Lee, he says over here that most fund managers have already deleveraged ahead of the election at the fastest pace since what we saw back in 2015. Hence, the put to call ratio for the VIX also spiking to those unprecedented levels. And he says, past the next few weeks, we remain constructive into year end, and they're expecting S&P 500 to close at 6,000 points or higher, right? So 6,000 points would mean new all-time highs once again. And if we look as well at what Ryan Detrick says over here, he says here's how the stocks have done after the past 24 election cycles. You know, whether it was the Democrats or the Republicans that won, the results have still been averaged out over here. And he says what really stands out is how well stocks have done after the 10 most recent elections specifically, right? Higher and higher a year later, 9 times and up 15.2% on average. That has been the historical results over there. So we can look at the next month, right? On average, the next month, stock should be up 0.4%. And if you look at 3 months later, 2.5%, and then things start to appreciate really quickly after that point. So we've had a look at a lot of the data based on various different signals for the stock markets and traditional markets, both 3, 6, 9, and 12 months later, to try and come to the determination whether things will be higher or lower. And the majority of the time, the probability is overwhelmingly in the majority, 90% in that region, that things will be higher, right? 6 and 12 months later. And if you're a swing trader or an investor trying to position yourself for the rest of this crypto cycle, then this is important data, right? You can utilize this to your advantage. And that's why I would be siding more still for at least the bulls to take control at some point. Now, it doesn't mean in the short term that you can't come lower. We're going to go over those levels as well, even under the guise of Kamala winning, right? So we'll have a look at that as well. If you look at this over here from 𝗕𝗎𝗕𝗏, a lot of you may know that Warren Buffett is about 1/3 in a cash position. He has been selling. But if you look at the history of that, he says over here, if you look at Berkshire's portfolio, the stock market immediately went on when they ultimately have a high cash position, and immediately went on to have the greatest 52 weeks in American history. And the time before that, the bull market in stocks lasted for 3 years later. These are the other times when Berkshire Hathaway and Warren Buffett were very, very heavy in a cash position. Now, remember, he's going to be trading a little bit of a different strategy since he has such a massive account, right? Think of it like this. Imagine you were holding 25% of the supply of a low cap meme coin and you wanted to exit, right? You're going to have to exit well in advance, well before that meme coin starts to top. You're going to have to slowly start to scale out. And I think this is essentially what he's doing. You know, this is a guy that's probably playing in alignment with that whole 18.6-year cycle. He's looking for multi-decade runs and then positioning for what would be the next big crash where he's going to slowly start to re-enter into the market. So he has to play a much slower game, compared to a retail trader. This is why, some retailers would be like, oh, bro, I'm up 20% this month. What did you do? And Berkshire did 12%, 15%. But remember, they're dealing with massive amounts of money. So I wouldn't worry too much about these types of headlines when it comes to the market. Simply just trade the chart that's in front of you. And if we look at the Dow Jones Industrial Average, there's a couple of key levels that I'm outlining over here. The first is going to be interim support coming in pretty much exactly where price is over here at about 41,300. If that level is lost, then you are going to meet with the upsloping trend line as well as the previous resistance level that was flipped into support. Maybe you come in for one more test there. That is 39,800. Now, I'm personally looking to take a trade into specifically the Dow Jones at those levels. So I'll give you the exact zone in just a moment. S&P 500, very, very similar over here. You have this pivot level and upsloping trend line, which matches up at about 5,200. Now, these are in the worst case scenarios, I guess. If the election is contested or Kamala wins or there's some sort of, shock event that comes to the elections, then, maybe a deeper dip down into that 5,200 for the S&P 500. Otherwise, the most probable area to find support is going to be the one that's closest to where price is at right now, which is around that 5,600, right? You're looking for support into this yellow box over here. That's your 0.382 fib level, as well as your 50% level from the most recent range, the 50% level being at the bottom of the yellow box and the 0.382 being at the top of the yellow box over there. Those are key zones. That's where I'd be looking for major support to be found. So again, the trade that I'm most interested in taking is going to be this one over here. I am taking it on Prime XBT. I've already placed my order. I'm looking at the histogram as well on the 1-day time frame, waiting for this to slowly start ticking up. So I'll be willing to, move this entry level around ever so slightly, just depending on how price action moves into that area and how things unfold over the course of today. But if I can catch 1 or 2 wicks over there, I think that's a solid region. Remember, all of these are listed over here under Prime XBT. If you go to Prime XBT under all markets, you'll see over here they got crypto, stocks, commodities, forex pairs, CFDs. Is the whole bank shoot, everything that you need, a one-stop shop for all of your trading needs, right? So if you do want to take a trade over there, there is an opportunity on Prime XBT where you can get a sign-up bonus using the link in the description below. So specific to at least my audience, I arranged it with them personally, getting 20% deposit on whatever you deposit. So if you deposit $10,000, you'll get $2,000 that you can use risk-free to trade with, right? Free money over there. Or if you're opting for the longer-term approach and you're going to be trading there really long, you're probably going to make more money over time if you opt for the 25% discount on trading commission. So the link is listed below over there. If you do want access to that, please do make sure you go ahead and grab that. Now, continuing on, let's go into Bitcoin. Bitcoin's hash rate continues to move to new all-time highs, right? The network difficulty hits new all-time highs now, exceeding 101 terahashes over there. So looking really, really good. Typically, it's like a chicken and an egg approach. Which came first? Well, usually when the hash rate is moving up like this, you tend to see price following. So we haven't looked at this for quite some time. This is your hash ribbons indicator on the weekly time frame, and you can see over here on the weekly time frame it did present a buy signal. Now, usually when you see this buy signal, the higher low that occurred just prior to that buy signal tends to hold without failure, right? On a closing basis specifically, it typically does not break. Now, if we do get some sort of black swan event, called a gray swan event, these are the levels, right? We're still range bound. It's very, very clear and easy to see over here. If we grab the highlighter tool, you can see this is essentially the range low. This is the range high. Maybe you come back down towards the mid-range, which is around that 60K level. That's where I said, personally, I would be willing to allocate into the market. If you get a strong sell-off over here, hitting that $50,000 region is a possibility. Personally, I don't really want to see price hang anywhere below that $50,000 region. If it even starts closing multiple candles below 60,000, I will have to reconsider. If you come all the way down to this level, I've labeled this as the ouch level. It is a strong area of support. So in the event of a strong sell-off, that 40K level would be major support. But I may have to call for the end of the crypto cycle at that point if you did see something that significant as a 40% drop. And the reason being is because we've been range bound for around 8 months over here. So if you go from all the way at the top here down to the bottom over here, it's going to start to look like macro distribution, which would probably lead to a short-term bounce, because it is at the end of the day very, very key level. So short-term bounce over there, but the rejection from the underside resistance, which is going to be anywhere between that $50,000 and about $60,000 region, I would consider that as a lower high, and I may actually consider exiting the market entirely at that point and completely reevaluating. So I'm just outlining, simply put, some of the worst case scenarios. I think it's incredibly unlikely, super unlikely. I think that the most probable zone where you find extreme support, should you even get there, is going to be around that 60K level, because if we move the hash ribbons onto the daily time frame, then again you can see the blue buy signal over there, which means that you should be defending the previous the higher low, which is going to be this one over here, right? Previous high low came in at $60,000. It also so happens to line up with that 200 MA and EMA, right? So very, very significant zones over there. And I'm going to show you on other time frames now the confluence of this level and why it's such an important zone to be focusing on. So again, I don't even think that you'll necessarily get into the zone, but if you do, that's going to be a high probability buy zone for me personally. This is what I've labeled it, the battle line, right? The battle line. Now, again, I said this is it's possibly over trend line over here. If you start taking out that 52K level and holding underneath that level, then you have to consider that, maybe this was the shortest crypto cycle that we've seen, the shortest bull market that we've seen, because under at least all of our analysis, we should still be looking at least 336 days left within this crypto cycle. Okay, so expecting support to be found anywhere around here. This is your key zone. Why? Well, because also that was the previous high low, right? That was the significant zone over there. So we are watching that level over there. And we can also throw on, remember, the high volume profile. Price is theoretically still narrowly closing above that high volume area, meaning it still meets the criteria for the Wyckoff accumulation schematic. So if you start to break below what I labeled the battle line over here, you risk invalidating this Wyckoff accumulation schematic where you break into the sign of strength and you're looking for a markup phase. As it currently stands, I think it's pretty crystal clear that we have been range bound, right? While you're in that range, you can still have interim short-term downtrends and uptrends, right? You can see we're putting in lower highs and lower lows all the way through there. And then we started to transition into higher highs and high lows. That's still the case, right? We still do have the ultimate lows there. We have high lows. We have high lows over here. However, this could be a choppy environment, right? You could come back down here. You can see again the significance of this zone, which is the same as this, right? It's the same as this zone over here. It's the same as the battle line that I have over here coming in that 58 to 60K region. It also lines up with the previous month's low. So, and that also lines up with your mid-range, right? If you take your chart and you anchor the previous quarterly high, the previous quarterly low, and then you look at the previous month's low, is that not your mid-range? Yes, it is. That's your mid-range. We know that the mid-range has significance. So the question is always, are we ranging or are we trending? That is always the ultimate question when it comes to which approach you're going to take towards your trading. If, of course, we continue to range, we've been in this range ultimately for 8 months, caught between these levels over here. If we're going to continue this range, maybe for the rest of the year, that takes you almost to a full 1 year range. That would be a very, very long-term range. If that is the case, well, then you'd be looking at this as your range high sweep. You broke back into the range, and then you can start to target back down to the mid-range. And if you do lose that mid-range, you're invalidating the full potential for a trend over there. And that means all the way down to range lows a possibility. And personally, I definitely don't want to see this at this point of the cycle. I'm okay with, possibly one more move towards the downside into the 58 to 60K region, still creating yet another high low over there. Prolong the range for a couple of months longer, maybe 2 or 3 months longer, and then leading into the end of the year, you attempt again into the SOS phase, breaking out, right? The full proper confirmed breakout will occur when Bitcoin starts to close multiple candles, above this pink line over here, which is that $70,000 to $72,000 region. Break and hold above that 72K region for multiple days, and you can say the trend remained intact, and you're leaving that 8-month long range. And when you leave an 8-month long range, it's very, very incredibly rare that will be a trap, right? Because it's a long-term range. You expect that price should mark up very, very quickly from that point. So that's what I'm watching over there. 4-hour time frame. You can see, there is stop losses below these lows over here. You can see there's definite liquidity in play, which is coming in around that 65 to 65,500. In the event that, again, there's some sort of economic shock that comes around the inflation and some high volatility, these levels could be threatened. And then this is where on your 4-hour time frame, lining up with those levels that I've just mentioned, you'd be looking for a deeper sweep down, right, into the mid-range. Hopefully you quickly reclaim the mid-range. Maybe some of those wicks come down into the 58 to 60K region. And then you're looking for the reclaim of that mid-range, hold that mid-range level, and that becomes the major high low. This is the level to defend, right? Same as the daily, same as the 12-hour, the 8-hour, the 4-hour. This is really the level to defend, is going to be these candles that occurred on the 10th of October, right? Those are the zones that you want to see closing candles above. No candles closing below that. Otherwise, you start to invalidate all the long. So at the end of the day, we still are on track, right? We still are on track. and it hasn't heavily deviated off of this trajectory. This is in terms of the pink being this cycle, and then you have the green and the orange line, which was the 2017 cycle was in orange, and the 2020 and 21 cycle was, of course, in green. So as it currently stands, still on track for 2025 proper bull run, altcoins included. If you are looking for opportunities while we remain range bound over here and you want to take plenty of trades and maybe have a smaller account and you want to grow that account quickly, the quickest way to do that, remember, is going to be with BitFunded. I'm bringing up BitFunded because they're currently running a Black Friday promotion. So if you go through to BitFunded over here and you go underneath, you can see their Black Friday promotion deal says buy any 2 trading challenges and you'll receive a free $5,000 USDT challenge within 72 hours, right? And remember, you can qualify for some major challenges over there. So the way that it works is basically like you buy 2, you get 1 free, right? But the free one that you're going to get, you can't buy 2 50K challenges, which will cost you $400 each, $399 each. You can't buy 2 50K and then you get a third 50K one free. That's not how it works, right? It's buy any 2 and you'll get a $5,000 one for free. So if you're looking for the small one, right, it'll cost you $79 plus $79. So around just under $160 over there. And then you'll actually receive $15,000 worth of funding because you're getting 3, where ordinarily you would receive $5,000 worth of funding. Now, these are some of the previous people that have passed their challenges and have been paid out. You can see this guy got paid out $29,000, this guy $35,000, this guy $7,400, and so forth, right? If you have a look over here, it gives you the objectives and the criteria based on, which one you're choosing over here. And it shows you what your profit target is. So it means you only need to get 8% profit, which you could do easily on spot trading. You could even just take out a 1x leverage long trade, meaning that you pretty much in spot, low risk, looking for 8% move over there. That will take you to stage 2. You pass stage 2 with 5% profit, and that's where you receive the $5,000 to trade with. And then remember, you keep, I think it's something like 80% of all of the profits that you make, right? So the important part is, what is your drawdown? Now, if you think of this from a risk to reward perspective, it's absolutely insane because your max loss that you're allowed is 10%, right? Which means that, this is essentially like a 1-to-1 risk to reward ratio for BitFunded, because if you lose 10%, you're out the challenge, right? But you only need 8% to gain. So you need less profit than what you can lose in order to win. If you do want to participate, guys, everything is explained in there. If you have any questions, you can tag one of the mods in the Discord. If you guys are in Whale Room, they'll help you out. Everything is listed over there. Let's continue. Let's have a look at the total cryptocurrency market cap. Still also putting in higher highs and high lows on the daily time frame. We do have major resistance overhead. This is still, I believe, creating the order block that could lead into the breakout. So we'll continue to monitor that. If we look at total 3, total 3 came all the way back down into this trend line over here, but you've clearly broken this parallel channel, which was a series of lower lows and lower highs, and you started to put in higher lows over there. However, remember, it's always important to also look at what total 3 is doing against Bitcoin. And when viewing it against Bitcoin, well, this is getting hammered, right? This is still getting smashed, which means unless you're in the right altcoins, you're probably losing money. So it's very, very, very important that you adequately position into these stronger altcoins which are outperforming Bitcoin. If you look at others, very, very similar, right? But the good news for others is it's fast approaching this trend line. You can see each time we've come into this trend line over here, others against BTC gets a bit of a big bid, gets a move. This has been getting smashed against Bitcoin as well now, probably, since January. So it's for the entire year. This has been over 1,000 days, right? 1,024 days of just complete annihilation against Bitcoin. And usually it gets hammered for around, like anywhere around 3 years. And then you go up for 1 year. So we're looking to transition into 2025, which would be that up year. Bitcoin dominance still pushing up, still very, very strong at the 60% level over there. ETH BTC still getting absolutely smashed over here. There is a fair value gap taken from the left-hand side over there. So, this is your next order block, your next area of interest. It lines up between 0.03 and 0.034. That's the ratio, ETH BTC ratio. Again, if the market gets smashed towards the downside, Ethereum could easily come back down into the $2,000 region. So please do be mentally prepared for that. You can see the clear range low. You've been putting in high lows over here. If you start to take out those levels, then it gets scary, right? 1,500 for ETH then becomes a possibility. If you look at Solana, still kind of hovering around over here by the mid-range level. It's going to do what Bitcoin does. If Bitcoin starts to catch a bid and the market following a risk-off approach where they deleverage, starts to re-leverage and come back into the market, well, this should quickly, easily reclaim that 160 zone. Holding above 160 is very, very important for Solana. Otherwise, you risk coming back down to about the 140, and then after that, about $120, right? So I am keeping an eye out on that. Other coins that have been strong, right? Other coins that have been strong. We've spoken about this. 𝗥, right? 𝗥, the meme coin. This one's really, really starting to climb the ranks over here. You can see in terms of mind share, 17.35% of mind share. And remember, we drew this out all the way back over here. We took this trade on the 10th of October. You can go back on that YouTube video on the 10th of October. We took it over here at about 14.5, and we're targeting 153% move, which is all the way up to the 3.618 fib level. And you can see we've basically played that out, right? We've got 154%, a little bit, just a tick more before it hits that level. So phenomenal trade. Congratulations to each and every single one of you who actually took that trade. This is the lesson, right? This is the importance of trading, what's strong against Bitcoin, because you can see that annihilation over there, and you can see the Bitcoin dominance continuing to climb. You can see others against BTC and total 3 against BTC getting smashed. This means it's not a pray and spray approach, right? You have to be very, very selective in terms of which coins you're taking. The strong coins, I believe, we've listed them. I've given you my portfolio. I have dropped it as well in the Whale Room Discord. For any of you that are in there, go under Captain's Take, scroll up towards the top, and you'll find it over there. So we're trying to stick with the winners. 𝗥 is on its way to become possibly one of my biggest meme coin positions. Not yet. Probably got another 100% to do, and then it'll be my biggest meme coin position. So a very, very strong wicket over there. But we can go through a couple of the other coins. Smash the like button, guys, and let me know what else you want to have a look at. We're going to look at 𝗕𝗚. Okay, 𝗕𝗚 coin. Let's have a look. How is 𝗕𝗚 doing? 𝗕𝗚 USDT. There it is. All right, so approaching this trend line over here. If it can't find support on this trend line over here, and you do get, again, all election dependent, it's going to depend on the elections. If things do turn south for Bitcoin, 40% move down for 𝗕𝗚 is a possibility. However, as I mentioned, I wouldn't want to become too bearish at current levels, specifically for Bitcoin. You might see something like that where you start to reclaim this trend line, or hold this trend line at least at last 3 digits would be 728. All right, let's have a look at Myro. Myro is also in the chart requests over there, so let's check it out. Myro, let's go. Okay, Myro, it's still at a pretty key level, right? You've had your big move up over there. You broke the downsloping trend line. You're putting in higher lows. This is coming into very, very key support. So I think for the long-term outlook, sorry, we've lost Myro. For the long-term outlook, I think dollar cost averaging into that zone with the outlook that you should find a major bottom between now and January is probably going to be a good approach, right? That's kind of how you want to be thinking about things. Or you can just wait for, the next high low to accurately confirm, and then you can go on the lower time frame and trail price just behind that, right? So currently that's what you're looking at, still high lows. Okay, what else, guys? Drop in the chats over there. Let's go to Injective. How's Injective doing? Okay, Injective starting to lose a key level, right? This is an important zone. You can see previously resistance, support, starting to fail that. If it reclaims and follows the green trajectory and reclaims $18, that will be good. That will be a good sign. But as it currently stands, this is definitely more bearish than bullish. This opens up the possibility that Injective can come all the way down to sub $10, right? So that is what it is. Let's look at TON. I'm still keeping an eye out on TON. Okay, TON also starting to follow the red trajectory. All these trajectories that I've given, by the way, I dropped in the Whale Room Discord yesterday. For any of you that want them and you're already in Whale Room, please go there. I said that, depending on how things go in the election, you're going to see your next big move. And these are the possibilities, right? So if it's going to be bad for altcoins and they're going to get wrecked, you're looking all the way down to about $3 for ton. If it's going to be bullish, well, you should break this downsloping trend line. So the best play here right now is probably if you're 100% cash, continue to remain 100% cash. If you're buying in spot, you can probably dollar cost average ever so slightly. But in terms of leverage trading, I wouldn't really take any leverage trades right now. I would wait for the dust to settle, for things to calm down, wait for potential appeal against whoever the winner is. This always tends to happen within the election cycles. And then you can start to reposition. It's probably going to be somewhere around mid-November. If I have to give you guys all a timing target, probably realistically around mid-November is where things start to settle down. And that's where I think bulls take back control. All right. What else? Okay, 𝗕𝗓𝗡𝗓. I know 𝗕𝗓𝗡𝗓 has been getting absolutely cooked over here. Really hammered towards the downside. Big sellers. So here's your chart, right? I mean, this one looks like it's on its way down to about $10 to $11, right? 10 to 11. Not to say that you won't get any spikes. You can easily get these big pushes up, but you need to wait for a break of structure, right? What does a break of structure look like? Well, if you focus on the chart with prices coming down, you're looking at the last lower high, which would be this region over here. So you really need to see price break above, this $16.51, $16.51, get back, or sorry, not $16.51, there it is, $16.97. Call it 17. Wait for 𝗕𝗓𝗡𝗓 to get back above 17, put in the higher high, probably come back down towards 15, put in a high low, and then you should get another move up, right? Okay, let's see. Let me just scroll to the bottom of your guys' comments. Okay, Phantom. Let's have a look at Phantom. I think Phantom was just chopping about, but let's have a look. Phantom, USDT. All right, let's go, Phantom. Okay, Phantom, right at key support. Very key level. This is the zone. Again, Bitcoin dependent. If Bitcoin starts to bounce from here, Phantom should hold this level. There's going to be a lot of hard stops placed below this low consolidation that led to the move up. So expect that there's liquidity, which is untapped, right? That liquidity is untapped. So if you have a bearish stance and you're looking for a place to gain an entry, here's your fair value gap, right? This is going to be your fair value gap for Phantom, coming in at about 45 cents. You're looking to gain an entry there, right? If you're bullish, well, ultimately you want to see this level hold and immediately start to move from here. All right, let's have a look at Doge. A lot of people are speculating around Doge because, they're saying that the Democrats' second biggest enemy is, of course, Elon Musk, right? So, and we know Elon Musk likes Doge. So there's a lot of speculation going into that. But let's see what the chart says. Well, the chart says they're bullish, right? You came down into the golden pocket over here, 0.65 to 618. Wick through it. The second candle came perfectly into that zone at 14.78. Held that level, and you're starting to push up. Doge still looks strong to me personally, putting in high highs and high lows following the break of this downsloping trend line. So I guess a lot of people are betting that that Trump is going to win, right? That's probably why they're starting to reprice back in. All right, let me know in the comments. What do you guys think happens? Who wins? Who wins the election? Let me know in the comments. I'd love to know what the general sentiment is over here. Okay, let's have a look at Brett as well. You guys say Brett looks scary. Let's check out Brett. Brett, here we have it. Okay, so there's Brett. I went through it with the live members yesterday on the Whale Room Discord. We spoke about this. We said, you could be putting in a bit of a deviation. This is what you're probably looking at. This is your major range low over here. When the diagonals fail, which is often, that's why I don't focus on them too much. I'm more interested in the horizontals. But when these fail, because we started to break that, right? I mean, focus on the horizontals. The horizontals are more key. This is a super critical point. This is your range low. This is where all the previous deviations were created. And that's the area where you're looking for support to be found, right? If it starts to hold underneath that area, I mean, yeah, then it's going to be really bad. Then you're leading into full-on markdown phase. All right. Let's go Bonk. What about Bonk? Okay, Bonk, we wanted to see a bounce from this region, failed that level. Let's just clean this chart up a bit so it's not so messy. Let's see. I'm going to clean this up a bit. Okay, Bonk. Okay, so these levels still remain untouched, possibly coming all the way back down into the zone. That means Bonk to 150 153,000, anywhere around that 153 to $160,000 region. That's your major range low. Remember, what we're waiting for as well is to see when the Fed starts buying back assets. When the Fed starts buying back assets, that's where the altcoins are going to have a good time. That's where everything will start to go up. That's where your M2 money supply also starts to expand much more rapidly. And usually they do this through money printing, right? That's how they buy back assets. Oftentimes they print money and they start to buy things up. So if you do want to learn more about this, remember guys, in Whale Room, there is currently the Black Friday promotion. You have exactly 25 days left to join. You're getting 42% off on the yearly membership, 25% off on the monthly membership. The link is in the description below. MOG, yeah, let's have a look at MOG. Popcat, we'll have a look at that as well. Popcat, MOG. We can look at Aptos, yes. Okay, let me try to remember those. Let's go to Aptos first. Okay, Aptos. Where's Aptos? Should be all the way on the top here. So Aptos, okay, very, very key level, sitting at your mid-range, right? There's your trajectories, which were dropped in Whale Room. Still putting in the high highs and high lows. But again, this is where you have to ask yourself, is this range bound or is this the start of a new trend? If it is the start of a new trend, you should find support over here at the mid-range at about 780, and then you're looking for a bit of a move up, maybe a bit more of a consolidation, but your trend continuation occurs with a break above this 1150 region, right? So that's for Aptos. Then you also ask for, let's go to MOG, MOG USDT. Let's click on that. Okay, up 8% today. So still hanging in there, right? Still hanging in there. Chopping about over here. It's really difficult to trade these kind of meme coins that or chart them. At least they're absolutely all over the place, but currently trying to form a range, right? That's the way I'd view it. Currently it's trying to form a range between the bottom of the yellow box and the top of the yellow box. It may range for quite some time. Let's see quickly what Popcat and Giga look like. So Popcat broke that level. Most likely place where it's going to find support is about $1. What you can do also is you can have a look at this entire range and you can mark out the 50% level. 50% level comes in at $1.10. Giga, let's have a look at Giga. Let's go under the presumption that Giga pulls back like everything else as well. Let's just mark off the levels. So 0.0429 would be your 50% level. But so far, Giga hanging on over there, putting in still higher highs and high lows. It's just choppy. It's all over the place. But this theoretically is still high highs and high lows. Therefore, you're looking at trend continuation over there. So again, guys, if you do want to learn more, it is all in there. That's it from me. I'm going to see you all on the next one. I'll see you in Whale Room later on the Zoom session for those of you that are in there. For the rest of you, I'll catch you tomorrow. Have an absolutely stellar day. And cheers for now, fam.